And it's tax attorney John Hyre, Hyre here, answering another question. These are the sorts of questions that we answer in the inner circle. You're going to notice I like to do more than just answer the question. I like to go into great detail and explain why. I think that's a lot more useful. So I got a question from M. This is a very broad question. This is actually 4 or 5 separate topics. I could have done actually 2-hour topics on any number of things, but let's take a look at it. Charitable bank versus trust. Okay. How do I establish residency in Puerto Rico? How does that have anything to do with one? Oh, I see what's happening. We've got someone who has been talking to AI and searching the internet and clicking on advertisements. And what this person's really doing, which is legit, is checking with me, are these advertisements legitimate? Because right now, what's out there? Charitable banks or charitable LLCs. Now, here's what to look for. My company is owned. I contribute some or all of my company to a charity. I'm going to say charity in quotes. I contribute it to a charity, but the charity doesn't get the money. Rather, the money finds its way to me, usually through a loan. So I contribute, I gift, maybe sell, it's usually a gift, my entity, for example, an LLC, to a charity. The charity now owns it. Now, if the charity really owned it, they would own it in a C corporation for tax reasons, because charities pay a tax called UBIT, just the same way IRAs and 401ks do. And to lower the rate, we use a blocker, a C corporation. So if a charity is going to own a business, this is the Mozilla model, right? Mozilla is a C corporation owned by a charity, and they pay the C corporation rate 21% instead of the UBIT rate 37%. If we were legitimately doing charity here, which is not what's happening, right? The person who's asking this is not interested in giving away a bunch of stuff. Oh, I get a tax break, by the way, but I really just want to give away my business. That's not what this person's asking. They're saying, no, I heard I can use a charity to save a lot in taxes. I've seen charitable trusts. I've seen charitable banks. I've seen charitable LLCs. I clicked online. Is this legit? Which is a good, smart question to ask. And the answer is no, it's not. Why? Because every one of these schemes I've looked at, and here's the first thing for you to look at, just to zero in on the essentials without having to get into details. The essentials are this. I get a charitable deduction for contributing some or all of my business to a charity. Usually it's an LLC owned by the charity, so a charitable LLC, but I have seen it called a charitable bank, which kind of tells you what they're getting ready to do. There's a reason that has that name. So I sell my business to an LLC owned by a charity. I take a charitable deduction, but the money from the business comes back to me. I don't care how they get it back to you. It's usually a loan, by the way. The charity owns the business. And in order to have a return, it makes me a loan. So it owns the business. I got a big write-off for selling the business. Usually I keep a control stake, which the courts and the IRS have a problem with. And I don't really want the charity to own the business. So the charity is going to make me loans. It could be loans. It could be low interest loans. It could be loans. But the money is circling back to you. And that's the problem. It's not a real sale. The people who are coming up with this are not sophisticated, have not done their homework. It's usually a salesman. You can usually tell because they're not very well spoken, and they try to use complex terms in a simplistic way. They always have some lawyer they refer to. I've talked to those lawyers or accountants. It's generally a huge waste of time. They say with one sentence something that takes me a day to answer, like with any bad argument, right? Proving someone wrong is much harder than them making a stupid statement. But these charitable banks, these charitable LLCs, some of them are even so wrong that it's criminal, as in people go to jail over it. Depends on the structure. But invariably, it involves a charity that either never receives the money. I've seen this in the trust context, where there are trusts and there's layers of trusts, and supposedly a charity owns your business, but all the money makes its way to you. Or the charity buys a bunch of property, like your house, but you get to use it tax-free. Same thing. It's the use of the property, the money circles back to you. The charity never really gets much of anything or anything at all. Run screaming from those arrangements. Run away screaming from those arrangements if it's a circular flow of money. Now, in terms of, is this better than a trust? There are, as you know, a million types of trusts. That's where details matter. Again, what we're seeing out there are a lot of people selling trusts that are tax-free, and they come up with a different version of it. When someone like me comes up with an exception, they just come up with a different version that does the same thing, and it abuses some other part of the code. The IRS is all over both of these, by the way. If you look, the IRS put out a pretty good letter that I think they're right, which should tell you something. I'm pretty aggressive. I don't always agree with them. But the IRS put out a letter talking about why the charitable LLC schemes generally fail. Likewise with these trusts that promise too good to be true results. The trust owns my business. The trust has a charity, or maybe it doesn't have a charity. I've seen all sorts of versions. But bottom line is the trust keeps all of the assets. I get all the benefit. I'm the one, whether it's through loans or the use of the property, consulting fees, whatever you want to call it. It's a circular flow of money, but I'm not declaring tax on the money that comes back to me. That's a problem. People are going to prison over it. I'm generalizing. Trusts and some of the more legitimate charitable arrangements are extremely complex. But what I smell here is the things I'm seeing on my feed as well. Too good to be true tax strategies being marketed. Facebook's not really particular about the advertisements it takes. So the charitable LLC, charitable bank idea, I think is BS. The trusts, it depends. I would need way more details. But if it's in the same genre, these sorts of trusts that, I just don't have to pay tax. They own my business. I still get use of their assets. The money circles back to me. That's criminal. Literally, I'm not exaggerating. I mean, there are actual people going to jail over this. How do I establish residency in Puerto Rico for tax filing? So again, we're on the internet and we're seeing all these great, I don't want to pay tax. I heard that in Puerto Rico, I don't have to pay tax. So I'm going to become a resident. And somebody said to me, I don't have to live in Puerto Rico. That's the ones I'm seeing recently. It's directed at lawyers. You can practice law and get Puerto Rican tax benefits without being present in Puerto Rico. People have gone to jail over that. Well, we have a trust. And the trust lives in Puerto Rico for you, but you still get the money. You will go to jail if you're caught. This is not just civil problems in terms of the IRS says you owe us tax and a bunch of penalties and a bunch of interest, though there is that. If they say you don't have to live in Puerto Rico, that is just wrong. If you can still have the money. I mean, there are ways to get Puerto Rican tax benefits that never touch you, only the company gets it, but you never get the money until what? You move to Puerto Rico and qualify. What are the three basic tests? Most of you know I reside in Puerto Rico, have taken advantage legitimately of the tax write-off, which is massive. I don't pay federal tax for most work I do. I don't pay tax for work I do in Puerto Rico. But if I work in, say, Ohio, where my parents live, then I do pay tax. I provide services. Services are taxed where you provide the service. So understand, even if you reside in Puerto Rico, truly reside in Puerto Rico, it doesn't necessarily solve all tax issues. The details of your tax issue matters. For example, in my case, I'm not trying to get hard money loans, the interest on those loans, non-taxable in Puerto Rico, which is doable. That's not what I'm doing. It's a different game. I provide services. If I provide the service elsewhere, even though I legitimately qualify for Puerto Rican residency, when I provide services outside of Puerto Rico, those services aren't covered by Puerto Rico. They're covered by the jurisdiction where I'm providing the services. As to residency in Puerto Rico, assuming Puerto Rico fits your needs, it's a lot more complicated than just establishing residency. There's much more to it. But to answer the direct question, how do you establish residence in Puerto Rico? One, half the year, 183 days, and that's a complicated formula. 183 days or more is one of three tests. You must pass all three tests. So some people say, I was there 184 days, and for the rest of the year, I lived somewhere else. I qualified. No, you don't. There are two other tests. And it's complicated because if you've lived here long enough, you can actually spend less than 183 days here some years, depending on the type of income you generate and where you generate it. The second test is Puerto Rico has to be your tax home. Your primary place of business has to be in Puerto Rico. Let me repeat that. Your primary place of business has to be in Puerto Rico all year to the end of the year, the last day of the year. And the IRS has a BS detector. It's not that I get an office and I have PO box and I have people send mail there, but I don't really do business there. No, your primary place of business is where you actually do the vast majority of your business, which means you are in Puerto Rico and probably a good bit more than 183 days. The third test is the closer connection test. And the IRS looks to see, well, do you really live in Puerto Rico? Really, really, really? Does your wife live there? Does your husband live there? Do your kids live there if they're minors? Do they go to school there? Do you have a mistress or the female equivalent, a side piece, I believe that would be? Does the mistress or side piece live in Puerto Rico? Where do you go to church? Where do you give money? Where do you contribute to charity? Where do you spend most of your money? Because all they'll do is pull your credit card statements and see where you're really at. Where do you really spend? Where do you do your banking? And yes, they look at where do you have a driver's license, et cetera. But that's not all they look at. They look at the reality. For example, if you have a dog, you have a pet, where does the pet live? Does it live in Puerto Rico or not? If not, that counts against you. So 3 tests for residency in Puerto Rico, at least 183 days per year, with a lot of permutations that I've spent an entire seminar going over. That's in the inner circle, the old one. We'll do a new one at some point. Second, you have to have your tax home here, which usually means your place of business. And it really is your principal, primary place of business where you truly, honest to God, do most of your business. And then finally, where is your closest connection? Looking at all factors. If you pass all 3 tests, then you're a bona fide resident of Puerto Rico. And maybe Puerto Rico reduces your taxes, because now it depends on how do you derive your income? Where do you derive your income? To give a brief example, if I have shares of stock, they're considered to live where I live. They're personal property, they're intangible. My shares of stock reside where I reside. So if I sell them in Puerto Rico, the gain is taxed to Puerto Rico, unless it was gain that was built up before I got to Puerto Rico. I bought Bitcoin or stock at $1. I moved to Puerto Rico when it's worth 1,000. I sell the next day. That's not going to work. There are rules against that. Let's say it appreciates to 1,500. Okay, living in Puerto Rico covers the 500. The appreciation from $1 to 1,000, Puerto Rico only covers 10% of. The appreciation from $1,000 to $1,500, Puerto Rico covers. So again, it's complicated. Like most tax rules, there's a lot more to it than sign here and we've got an entity and you have a Puerto Rican entity and you don't pay taxes. And even if you really, really, really do live here, it's not necessarily enough. We have to look and see, for example, do you have stock? How long have you had it? How much value was there in the stock? What was it worth when you moved to Puerto Rico? Maybe we can save you taxes on that. Works the same way with crypto. Then we also can say, oh, you provide services. Well, only the days you're in Puerto Rico providing service matter. When you're in the United States itself providing services, that's taxable in the United States. We don't care that you reside in Puerto Rico. So very broad concepts to which I gave a very broad answer. That's a starting point for how to think about these items that were brought up, very broad, ambiguous items. Really, those 2 questions would cover, I would say, 4 or 5 separate topics of 2 hours each, because there are a lot of moving parts. For example, the charitable bank concept is its own topic on its own. Ditto is your trust fake? And I've covered both in prior sessions of the Inner Circle, and we'll do some newer sessions because it's always nice to do a refresh and make sure our data is current.